It's actually gone forever. Let's try this one.
BlackRock
No.
removed it.
BlackRock removed the alpha here, but it's the gap down towards, I believe, $91,000, $92,000 on the futures gap. I have to bring this up, right? People are always like, you're going to be a bear. No, it'd be healthy for this to happen. But that futures gap filled when everybody said it would never fill at 77K. They're like, no, it's at 100,000. We're going to never see it again. Market manipulation is very easy. And we're talking, but what is that, 10%, 15% on Bitcoin's price?
And something you're talking about, these gaps that you're talking about, where you have a futures gap created, the markets on the traditional side are closed, and the 24/7 in Bitcoin keeps running and leaves that gap behind. I studied them very closely, even before 2023. And then, when we had institutions come in, BlackRock came in, ever since the beginning of 2023, we literally have not missed a single one of them. I didn't take that, we were starting to lose the hit rate. We were at like 85% up till 2023. And then since then, we have literally not missed a single one of them. So there is one at 92 right there.
Yeah.
And that's the main one, because that's the true no wick complete hole where no wick went through a liquidity grab. The 96 one does have a wick that they were able to cover a lot of.
Right. On the 92 level, too, there's going to be so many eyes on it once it does start. If it does breach below 105 and it hits 98.
Can you explain real quick, Kelly, what the futures gap is, though?
Yeah, let's back it up.
The futures gap essentially is Bitcoin is traded on exchanges as Bitcoin, but then we also have Bitcoin futures on the CME, Chicago Mercantile Exchange, that trades essentially on the traditional finance trading hours that the options and futures trading does for the traditional market.
The Monday to Friday.
Right. So it closes during a gap during the day, but then it reopens. But then it also on Friday night closes and then opens Sunday. So the gaps that most predominantly we're talking about is when the futures market closes on Friday. If say Bitcoin's price moves up 5% over the weekend and the futures open on Sunday, then the futures open up higher than where it closed. You have a gap there, which essentially is a target that you can just look at on the chart that is very likely that the price at some point is going to come back down and flush through that area. So there's liquidity that's explored that area in the futures market before it continues or breaks down from there.
I'm actually curious on how long before the futures market's 24/7 and we no longer have to have gaps.